Okay, how you doing? I'm Ronnie. We are live on YouTube. I hope you're having a great Monday. Welcome to our show. Today, I am talking about financing a vehicle and my thoughts on a 60-month loan or whatever type of loan you're looking for. I'm going to try to share a couple of pages with you, but keep in mind I'm new to this, so the YouTube thing, so it's going to take me a minute to get all this stuff together. That being said, my name is Ronnie Haskins. I'm the owner of Auto Search USA. I've been in business for about 20 years in Colorado Springs, but this is all I've really done since I was 23, and I've been working on this particular business for that amount of time. I love helping people make the right decision about vehicles, and I'm noticing the older I get, the more I want to share that with the world. So I hope you enjoy it today, and we're going to start out right now. So let's talk about financing. We have many ways to finance vehicles. You can do leasing, you can do long-term loans, you can do short-term loans. There's all different types of ways to do it. But in my topics, I'd like to talk to you about putting thought into it before you actually sign up for a loan, and share with you some of the tips that I've learned over the years to help make your decisions a lot better. Now think about it for a second. People finance cars. It's the second largest purchase you'll make in your life, right? But it's usually decided within about 8 hours. People have an idea, or the car is not working well at the shop, and then they go to the dealership and they make a decision right away. And I've always found that to be super interesting, and why it happens, I'm not sure. I think that as a whole, we've all gotten used to being able to get stuff as fast as possible. When you think about Amazon, Walmart, whatever the case may be, we can have stuff delivered to us. I mean, there's just no end to how we can get all of these needs satisfied. So they happen rather quickly. But when you're talking about a car like a house, it affects you for more than that weekend. It affects you for years. And if you put a little bit of thought into it, I think it can help you make a better decision as far as where your money is going over the next 5 or 6 years. So that's what I'm hoping you get out of this video today, is you will be able to make a better decision when it comes to buying a used car and financing it for a long period of time. Or if you decide to do that, then you'll know, all right, this fits in the box, and all of this stuff seems to make sense. So let's talk about some facts right now. Financing rates are around 3.5% to 4% right now if you're looking at used cars or new cars. I'm not talking about the new car special financing rates, because those things vary and they go up and down depending on the manufacturer. But rates are around 3.99%. So let me see if you can see the screen. When you're looking at financing a car that's around $30,000 for 5 years, the payments are around $600 a month. So around, let's see, 608. So $608 in Colorado Springs in the city limits with our tax laws, our tax numbers. It's about $2,500 in taxes. So you're looking at $608 a month for 5 years. That's an impactful number to most of us. It's a game changer as far as, okay, I was hoping for a $350 payment or a $400 payment, but no, $30,000 car is around $600 a month. So lots of cars fall into that range right now. Actually, that number is a lot lower than a lot of the cars out there. So when you're looking at $30,000, you have to understand that this is the going rate for a lot of the sport utilities, a lot of vehicles with extra equipment like leather and a sunroof. So you could get to $30,000 really quickly on a car. So common sense in my industry seems to work against people. It works against us, because when you're thinking about like getting a car and getting a 5-year loan, you're thinking, all right, I don't want to pay $600. I want to pay, let's say, $500 a month. So, common sense is like, yeah, I can afford that payment, but most people don't understand what that means as far as what type of car you get at $500 a month. So let's look at that number. So 30,000 is about 608. $25,000 car is 508. So it takes $5,000 less to get $100 knocked off of the price per month. not a big deal in your mind or in my mind, but think about the things that you're doing, because how old do you have to go in that vehicle's life in order to get the car for 25,000? So, and that's where the common sense kind of hurts people, because they just think about today. Like, today I need that $500 payment. Okay, I understand. But, what are you giving up in order to lower that payment that far? And are you really saving any money over the 5 years? When it comes to repairs, when it comes to tires, brakes, oil changes, things of that nature, you may not be spending any less. It just may be less per month. So if you're looking at an older used car, I'd like to give you this one tip to start with: is try to find one that you can finance that still has a factory warranty. So something that's still less than 36,000 miles, or at the very least less than 60,000 miles. Most of the manufacturers today have 5-year, 60,000-mile powertrain warranties on their vehicles. That means the engine and transmission is covered up to 60,000 miles, or 5 years, 5 years of life of that car. So if it was put into service in 2015, technically it's running out of warranty in 2020, or 60,000 miles. So what I see a lot is people get so wrapped up about the payment that they forget about what they're buying. They don't pay enough attention to, hey, this car won't have a warranty on it when we start a 5-year loan. So think about that, how that affects you. It's not just today. That payment is not just going to affect you today. It's going to impact your life for 5 or 6 years. So, the last thing you want is to have one good year in the car and then all of a sudden have to do major repairs, and you're spending more than $500 a month at that point in time. So keep that in mind. Most people that I've talked to, or all of us in general, we just don't take a look at the long-term effect of what that's going to do to us. So, 3.9%, 25,000 is about $500 a month. So let's see. How do you know if a vehicle's under warranty? So if you're looking at something used and you want to buy something that's under warranty, you can easily get the VIN number of that vehicle, plug it into Carfax, and it'll give you what's remaining on that warranty. I had an example up, but it's going to take me a second to get to it, and I'll pull it back up for you guys. So you can go in, take a look at Carfax, and it'll show you exactly what's remaining on that vehicle's loan. I'm sorry, vehicle's warranty. So let me see if I can pull it up for you so you can take a look at it. Here's a good example right here. This is a Ford Explorer. It's a 2015. And this is data that you can definitely take a look at. So, all right. So let me pop this over on the screen, and then we can talk about this for a second. Okay, here you go. If you can see this screen, okay. Right here on this specific VIN number, it shows that the basic warranty of 3 years or 36,000 miles is expired right there. The drivetrain is 60 months or 60,000 miles. So it's has 21 months remaining, or 27,000 miles. Emissions usually doesn't bother people that much, but you should probably pay attention to it. It's 96 months or 80,000 miles. So that's still available as well. And then corrosion, 60 months, unlimited mileage, so 21 months. This information is available to you. Sometimes you have to pay for Carfaxes. Most of the dealers are paying for this stuff now. We pay for it, so we can help you with that. But I hope that this helps you understand, even if you're getting a used car, you want to make sure it has some type of warranty remaining on it. So that's the first thing. The next thing I want to talk to you about is, your financial future over the next 5 years when you're buying a car. How much cash you're putting down. On car deals nowadays at this type of an interest rate, $1,000 down will affect your payment about $10, $15. It's not a lot. The payment dropped from $508 to $490. So it's not a ton of money. $490. Yeah, $18 a month. So $18 a month per 1,000 on a 5-year loan. So in order to get that payment from $508 to say $350, even if you put $5,000 down, you're still at $416. So sometimes it's okay for us to just say, you know what, this isn't fitting. I probably shouldn't be buying this particular car. And that's hard for us in society today. We're, like I said earlier, we're looking at Amazon and getting stuff when we want it every second, you know, maybe we don't need the leather. Maybe we need something else that will make that payment more palpable, something that fits into the budget and doesn't detract from investing or other types of things that we're trying to do with our lives. And one major point about that is this car it's guaranteed to be worth zero over the next decade. So none of them appreciate. They all go to zero. So as you're making payments trying to own the car, it is steadily depreciating faster than you can pay it off. So even though putting money down is great, it helps lower your payment, you still need to think about the long-term picture and the plan of where you're going with this automobile, this particular asset that you're going to be driving for 5 to 10 years. And so cash down is great, but also plan where you're going. You know, like, I mean, we're going to pay on this car for 5 years, pay it off, and then we're going to try and keep it for 5 or 6 years until the repairs start outweighing what we want to spend on it every month. That is actually an excellent way to look at this. So, you know, when you're thinking about the long-term impact it has on your life, make sure you're thinking about what you're going to do after you pay the vehicle off and how you're going to spend money to keep that vehicle running so that you don't have to have a vehicle that's down or it's affecting your family or whatever the case may be. But most importantly, those years that you get to drive it without a payment, what are you going to do with that money? You're still getting the income. You were used to making the payments. Now it's time to be disciplined and either invest it, add it to paying off your mortgage. There's lots of things you can do with that money at that point, and I would highly recommend you talk to your financial planner because that way you can map out what's going to happen. So we seem to discount planning when it comes to automobiles. They seem to have become impulsive commodities where people like to buy them quickly, and then there is no plan. A lot of times when clients bring me cars to trade them in, they aren't even paid off. So they set up a long-term loan. They never reach that long-term loan payoff. And now we're trading in and getting another car because some life-changing event, like they had a kid number 3, you know, the car no longer fits enough people. So you have to go to having a third seat or a minivan or a Suburban or something like that. So if you can think not just today or this weekend, but what's going to happen over the next 5 or 6 years, you can help avoid some of the pitfalls that people fall into when it comes to spending money on cars. So I hope I'm making sense, but we're doing our best. So let's look at this. Leasing. Leasing is just another way to buy a car, guys. It's not the end all. I do a lot of leasing for people. There are more ways to do it than just leasing, but I think it fits a lot of boxes and checks a lot of boxes for clients in today's driving with today's driving habits. So the cheapest way to buy a car is basically writing one check and then having no payments for as long as possible. But then you're doing something else with the money you would be spending on the car, like investing. The second cheapest way is to put a bunch of cash down, like $5,000 to $10,000, and then finance that car in a very short period of time, pay it off, and once again, have no payments for quite some time. Two very difficult things for us to do in today's economy. So short-term leasing has become probably it's probably the second best way to buy a car, in my opinion. And I've been doing this about 23 years. So when I look at this, I don't look at it based on what I can sell you. I look at it based on what I'm seeing in the market trends and what's going on. So I have a simple lease calculator that you can look at. Let me find that website. So Lease IQ is one of them. So you can go and build your own opinion when it comes to leasing a car. You know, you don't have to take mine. You don't have to take some salesperson's information. It's good to use that information, but what matters is how this information is going to impact you. So if leasing fits, that means you can drive within the mileage parameters. You can take care of the car and keep it up to snuff. You don't have to keep it brand new, but you do have to service that vehicle and make sure everything's done before you turn it in. Like, they won't take the car back with ball tires. So you have to do tires and be prepared to do that. But, you know, it's not as hard as people think. However, do the information, do the research, call somebody you can trust to talk to about it. And if it fits your driving habits, you can get less of a payment, get more car to drive. You just always have a payment. So that's just another alternative way to do it. This whole video today was supposed to be about my thoughts about long-term loans, and I really don't have a problem with them. I just want to see more people do long-term loans on newer cars, not trying to, setting up a 10-year plan on a car that already has 75,000 miles and you still have to finance it for 72 months. It's time for us as a whole to look at it and go, you know what, this is probably too much car. I probably shouldn't be making this type of a payment on this particular car. Why am I not looking at a newer car with less features, less stuff? And it's tough stuff to swallow, guys, but I'm telling you, I see it quite often. We fall in love with having to have leather, having to have a sunroof, or whatever the case may be, heated seats in the back. You rarely need heated seats in the back. But if you do, make sure that it falls within your budget and meets your guidelines. So here's a tip for you. Write down what your must-haves are, and then write down what your likes are and see how many of them coincide. You know what I'm saying? Like, write down, you have to have 5 seats. And then write down, that's a need, right? And then write down under the likes, I have to have 5 seats with leather and heated seats, and so and then write down what your budget is. So you can start looking and planning what's going to actually fit in your budget properly, meaning you can make the payment, you still have money left over to invest every month, pay down your mortgage faster, feed the kids, save for college. There's tons of different places that your money can be going. But into a car that's depreciating every month is not the best place to put that money. So make a list, write down what you need, and write down what you like, and see what you can live without. Because having a sunroof that you open one time a year that's costing you $50 extra a month is not a smart move. Now, sitting around the campfire when I go camping or hanging out with family and friends, we seem to think that $50 is still a big number in society. When you're going out and spending money or going to dinner or going to the movies and you're like, man, this is $50. It's like, yeah, it is. It's quite a bit of money. But when it comes to cars, people seem to, they forget about it. They're like, well, it's only $50 a month more, so I think that we should save more money on cars. That's really my 20-something years of experience talking. We should spend less, get less equipment, and newer cars. That way, these cars have the potential to last quite a long time without costing us extra money. And I see that happen quite a few times with my clients. When I sit down with them and talk to them about it, and they tell me what their hopes and dreams are, and I help crystallize that into a solution for them, we spend direct time talking about, you could do this, but if you spend $2,000 more, I can get you a car that's 2 years newer, still has warranty, things of that nature. And that way you can keep that car longer and hit your investment goals and your financial goals a lot easier than having that money tied up into a car. So let's see if we have any questions today. This is like my second time going live on YouTube, so forgive me if it's a little choppy and I'm all over the place. But I am trying, and we are not going to stop doing this. We're going to take your feedback, look at information that we feel is valuable for you to help uplift your financial literacy when it comes to cars. And we're going to continue to deliver this information on a weekly basis. So right now, I can't even remember how to find the chat room. So I'm going to go take a look. Let's see. So I know that my wife probably is going to ask a question. Okay, Macon, Georgia. What's up, Rosanna? Rosanna, how are you doing today? So Macon, Georgia. Okay, so the whole talk about Rosanna asked, she says the live session we did before changed her mindset about leasing versus purchasing. My brother has been an owner of houses for a long time. And what he decided to do was lease a car this time around. And he's reaping the benefits from it. He has a payment that fits within his budget and a brand new car. So yeah, when we start to make it an argument or a discussion about how long you're going to be paying or is this cheaper, that's not necessarily what we're talking about. We're talking about the use of your money. People will make that argument. If you can spend $500 a month to buy the car over 5 years. and you may or may not reach that goal of paying it off versus leasing it for 300 and then having a new car every 3 years that you never have to put tires on, you never have to do brakes, you never have to do things of that nature. Now you're starting to forecast your future, which I think is amazing. So talk about the benefits of leasing again. So Rosanna, we can definitely discuss that. It's a short-term way to buy a car with a lower payment, and it basically eliminates most of the repair work you'll have to do. There's only a select few car companies that are paying for the maintenance, like BMW and Mercedes doesn't do it, but there's just a select few that pay for the maintenance. However, if you lease the vehicle, you're only changing the oil like twice a year, as well as tire rotations. You have to put gas in it and other things of that nature. But you can basically map out exactly what you're going to spend on that car over 3 years. 6 oil changes. The fuel cost is right on the window sticker. So when you see the window sticker, it gives you an estimate of what your yearly fuel cost is. So you can do that math and punch those numbers in and go, wow, I'm going to make my payment. I'm going to spend this much on fuel. And this is how much 6 oil changes is going to cost me for 6 years. Outside of something crazy that happens, somebody hits the car, you got to pay a deductible to get it fixed. It's really bulletproof when it comes to forecasting where your money's going for 3 years. So I love it a lot. I've put my money where my mouth is too. My wife and I lease cars, but I'm not against long-term financing, guys. I'm just telling you, keep your mind open when it comes to money decisions because you might be missing something. So if you're new to the channel, please subscribe. We're going to be bringing more information like this on a weekly basis. I'm going to try and tune up these videos so they get to be a lot better and I'm not so boring. But, right now, this is where we're at. But I'm happy to have you guys on board. Thank you very much for joining in today. And if you've got any comments or if you want topics talked about, post them in the comments and I'll be happy to respond to you. Thank you very much for tuning in. I hope you guys have a great Monday and I hope you learned something today. Thank you very much.